Are you currently binge watching Bigger Pockets, Graham Stephan, Grant Cardone, or One Rental at a Time on YouTube? You've decided that you'll want to start investing in real estate, but you're not sure where to start. Hey guys, it's Mike here, and my goal as a real estate investor with rental properties in 3 different states is to help you buy your first or next deal, even during this crazy economic turmoil we're experiencing. Now, in this video, I'm going to break down the 5 things that you have to do and accomplish in order to buy that very first rental property. Now, this video is for the absolute beginner, the noob, the rookie, or as I like to call him, the nobody with nothing. Now, you could be an 18-year-old kid who just graduated high school, no financial support from your family, no plans to go to college, working a minimum wage job, just like I was. And you're hoping to get it out of the mud one day and become financially free, just like I am. Or maybe you're a little bit older and you've had a run of bad luck. You've gone through a nasty divorce, lost a job, racked up a ton of bad debt, and you're looking for a path to a better life, just like one of my close friends, Dion, from Dion Talk was. Now, no matter who you are, I'm going to lay out a very specific blueprint that you can follow, a to-do list that you can start checking items off of in order to get you on a pathway to buying your first rental and to financial freedom. But here's the disclaimer, the red pill that might be hard for you to swallow. Anybody who tells you you can get rich quick is lying and probably trying to scam you or sell you something. You can be rich and become financially free, and I believe that even those in the worst circumstances can buy their first rental property within 2 years and make it to financial freedom in 10. One of the richest men to ever live said that most people overestimate what they can do in 1 year, but underestimate what they can do in 10. So be prepared to work. Be prepared to get uncomfortable. Be prepared to make sacrifices. And be prepared to hit the like button and sub to the channel for the YouTube algorithm. All of these things are necessary to escape the financial matrix. Let's get started with step number 1. You need a job. Now, I know that being a wage slave to a 9-to-5 job working for the man may seem like a step in the wrong direction if you're looking to be financially free due to real estate investing. But hear me out. Don't underestimate the power of consistent W-2 income. Lenders love 9-to-5 jobs. Ask any self-employed entrepreneur how difficult it is to get lending because they'll let you know pretty quickly it ain't easy. Also, don't make the mistake that I did when I was young and assume that just because I was working and making minimum wage that I wouldn't qualify for the right type of lending to buy a home. I missed out on buying real estate in 2010, 11, and 12, and a few more years because I had limiting beliefs. And those beliefs made me think that I wouldn't be allowed to start purchasing real estate. Now, if you want a more detailed list of the worst financial mistakes that I've made that slowed me on my journey, then check out the video right here. Getting a job, any job, and working your way towards 2 years of work history is required by almost all lenders who will be able to help you and give you a mortgage on a rental property. Now, it doesn't matter the field, the position, or the income. You need to have 2 years of experience and the pay stubs to show what you're making in order to qualify for a loan. Now, from there, obviously, the more money that you make, the larger a loan you can qualify for. But don't worry, if you're making very little, there will be options around this later. Now, here's a pro tip given by one of the best assistants to the regional manager that ever worked for the famous Dunder Mifflin Paper Company. Dwight Schrute said, "Look, I'm all about loyalty. In fact, I feel like part of what I'm being paid for here is my loyalty. But if there were somewhere else that valued my loyalty more highly, I'm going wherever they value my loyalty the most." As much as you hate to see it, employers are typically willing to pay 10 to 20% more to get new employees, and they're only willing to pay 3 to 5% to retain an existing employee. The average pay increase an employee in the US gets when switching jobs is 14%, according to Google. So go get yours. And if you want help on finding a better job and strategies that you can use to do better, hit me up on Instagram at MillennialMike. Step number 2, start building credit. If you haven't downloaded Credit Karma, please do so. I know that it isn't 100% accurate on what your credit score is, but it will help you start monitoring some things. Now, I might have to start dodging a little bit of incoming sniper fire here from Dave Ramsey, but it's the truth. Lenders require you to have a minimum credit score of 620 to qualify for most mortgages. Some lenders may go all the way down to 580. However, in order to qualify for the best interest rates, aka the lowest payments, you want at least a 740 score or higher. Now, if you, like me, religiously listened to Dave Ramsey and never had a credit card or bought anything on credit, this can be a very difficult hurdle to overcome. I recommend getting 2 credit cards, and if you're worried that you're the type of person who won't be able to control your spending, only use those cards for fixed cost items like gas or your water bill. Now, whether you pay with credit or use a debit card, it's not going to affect spending on certain purchases like electricity or your cell phone. So I disregard the naysayers who claim that using a credit card is going to cause you to spend more money. That's not true for all purchases. Now, if you're not the type of person who can be easily influenced by impulse buys or cash register candy, then use credit cards for everything. And get a good travel card to rack the points up on. I haven't paid for a flight in years because of credit card points. If you have bad credit already, if you've racked up credit card debt making bad purchases, you need to aggressively pay it down as quickly as possible. This is the only major hindrance to you getting your first rental property. Lenders have to consider your debt to income ratio. You need to keep the amount of your income that you spend each month in order to cover your existing debts low, so that you can use that income on a mortgage payment instead. If you use too much of your income to pay debts like a car payment, credit cards, or potentially student loans, you're going to struggle to qualify for traditional financing. Now, if this is you, you can still get around this and purchase real estate, but you'll probably be looking to find a seller finance deal or non-traditional financing. These are more difficult to find, but not impossible, and many times they're actually more advantageous. Now, if you want to watch a video on a seller finance deal that I did, then check out this video right here. No credit check was required when I did this deal. I just had to have the down payment saved, and that was it. My final word of advice is to remember that credit is important, whether you like it or not. So build it, preserve it, and take care of it, because in most cases, you're gonna need it to qualify for financing. Step number 3, saving up for a down payment. Now, you can get owner-occupied financing with either an FHA or a conventional loan, like I did with my duplex. Sometimes it can be as little as 3.5% down. That means you need $3,500 for a $100,000 property, or $17,500 for a $500,000 property. I know that inflation is running rampant. Things are getting more and more expensive daily. You might have to scrimp, save, and sacrifice to make it happen. How hard are you willing to work to make your dreams come true? If you made it this far in the video, I hope you're the type of person who'll do whatever it takes. I worked 3 jobs for years, had roommates, shopped at Walmart. I drive the same 2 vehicles that I've had for 10 years, a 99 pickup truck and a 1992 Geo Metro. I have 9 rental units, but I'm always amazed at the fact that every tenant I've ever had in this duplex that I house hack has a nicer car than me. Oftentimes they own a brand new car, and it's almost comical to see it parked next to the absolute clunker that I have on my side of the driveway. Look, one day I'm gonna own that big beautiful Lamborghini, but not today. It's hard to save that money, but you can do it. You have to do it. If you're saying to yourself that you can't save a down payment on an $800,000 house because you live in a ridiculously insane housing market like I do in Seattle, don't worry. You can have your first property be an out-of-state rental. And I've helped many people buy their first deal out of state in a more affordable market. So no excuses. Start saving. Pay yourself first. Hide it in a savings account that's out of sight, out of mind, and watch my videos on investing at a distance. Once that money is saved and you have your down payment, it's finally time for step number 4. All right, step 4 is securing your lending or your financing. Now, it's time to take the 3 things that you did up to this point and go and lay it out in front of a lender. You have the job, you built your credit, and you saved for a down payment. Now you can go to a lender and find out what you actually qualify for in terms of home buying power. Now, I recommend getting quotes from multiple different lenders. You need to do this usually within a 14-day period, otherwise your credit may take additional hits when hard inquiries are performed. If you get all of your credit pulls done within 14 days, your credit report will lump them all together as one credit pull, and it will negatively affect your credit less. Now, the reason that I recommend going to multiple different lenders is because lending is a funny thing. Each lender typically has their rates, terms, and dollar amount they can lend you. They can't budge from it unless you bring to them proof that another company can offer better rates, terms, or a dollar amount. Then the lender is typically authorized to match or beat the other offers. Another very surprising thing is that there is a massive variation between what lenders will approve you for. Now, I found through my own experience and by talking to other investors that big banks like Chase, Wells Fargo, or US Bank typically have the worst financing options. And online mortgage brokers and lenders typically have the best. So make sure that you get 5 different offers and then take the best one to whoever your favorite lender was and see if they'll match it or beat it. And if not, then go with whoever it was that had the best rate, terms, or dollar amount. Once you have that lending secured and that pre-qualification letter in place, you can finally start shopping for properties. Step number 5, grit and determination. I left the mindset aspect of real estate investing for the end. I am so sick and tired of these fake gurus constantly pitching you for 90 minutes on improving your lifestyle, create a life that you always wanted, get rich, be your own boss, quit your day job, hyping you up on all of the positives about being financially free, as if you couldn't have figured it out on your own. But at the end of the day, usually it's just so that they can sell you a book, a course, or a mastermind group, and take your money and run. Now, most of these scams offer no real advice or information that would actually help you get started investing in real estate, but they really don't care. They just want your cash. They get away with it because what they're saying is true, or at least it's subjectively true. But here's the real truth. Investing in real estate takes sacrifice. It takes hard work and determination. It takes perseverance and it takes grit. It's going to try you, it's going to test you, and it could break you. The first rental that you buy, the first tenant that you place, could end up being a nightmare that leads to eviction. That's exactly what happened to one of my mentors, Michael Zuber, from One Rental at a Time. Now, when this happens, you're going to feel like you screwed up, you made a mistake, or that you failed. You need to be able to dig deep and keep pushing forward. It's important to have a very clear why defined. Now, I grew up as poor as can be in the U.S. Section 8 housing, food stamps, free lunches, 6 kids from 3 dads, and my mom had a job that I can't say on YouTube because my video would get demonetized. I got kicked out of my house at 17, had to move across the country. I graduated high school the year the Great Recession started. No college, no silver spoon, no special connections, but for whatever reason, I was born with, or I developed at a very young age, a strong work ethic and a never give up attitude. I've failed at so many things in life, more than I could ever list, but I just keep going. There's always another move to be made. Life's like a big game of chess. You can lose your best pieces, get cornered, and be on defense, but there's still always a move to make, still always a way to win. Some moves are better than others, but what's important is that you keep making moves, keep doing better. Refuse to lose the game and make other people tell you no. Don't tell yourself no. My why isn't that I just want to be rich and have nice things. I hated being poor. I hated being powerless over the direction of my own life. I hated not having the freedom to do what I wanted, when, where, and with who I wanted. I refuse to let my life be dictated by circumstance. And I believe that if I work hard enough and apply myself, I can do whatever I want. And so can you. Get around other people who believe like you do. Avoid the negativity that's out there. And if you don't have any other people in your life pushing you to do better, then watch my videos and leave a comment because I'll push you to do better. From these 5 things, there's so many more that I could expound upon and other things that you're going to need to be successful to make it as an investor. But these are the 5 most basic building blocks that you're going to have to master. For more help and guidance, check out the rest of my channel. If you did make it this far, help your boy out, like the goddamn video, and sub to the channel. Let me know down in the comments what your target date is for your first rental property. Thanks for watching, guys. I really do appreciate it. And as always, I'll catch you next time.